It's great to have you on the show. Thanks very much for taking out the time. What do you make of the comeback that we've seen in volatility, which has kind of, in a way, capped the upside to this market? So yes, nobody's doubting that we may not go back to our previous record highs, but how much further from there would seem like a bit of a struggle, even if the growth numbers come back. So while the economy has not topped out, it seems like the market is divided on whether the market has indeed just as yet or not.
Yeah, I think after a very last calendar year when we saw very low volatility, in fact, it was the lowest dispersion in the market index, what you see in the last 15 years. I think we were in for a higher volatility in this calendar year. And I think just after the budget, it provided that. And I think it's now moved on to the global front. We have seen across, especially in the US, the kind of pullback what the market has done from its peak is probably signs of things to come going forward. I mean, as interest rates in the US have gone up, I think there is some concern in terms of the huge amount of liquidity which has been floating around, okay, whether there could be some pullback of that in the coming months. So I think it's clearly now the global events, I think, which will drive our markets and would lead to the kind of volatility what we've seen in the recent days. It might continue for some time, and that could put some kind of a near-term pressure on the market, we think, while global growth is also very strong. Domestic earnings in this quarter have been fairly good, but I think some of these other factors on the global front will override that, and that could probably lead to some kind of a cap in the short term on the market to move up and make higher levels. But I think we have seen these periods of volatility in the past also. They last for some time and again things bounce back. So I think it should be a passing phase is what one can look at it.
But Mahesh, considering how dreamy all of 2017 has been, wherein there was just a one-way move up for the markets ever since demonetization the previous year, and at the fag end, and given the kind of returns that we made, 30% on the index alone, 40-45% on the mid and the small cap index, and I'm not even getting close to some of the individual stocks. What's the kind of retail behavior that you've seen in the last few days? Is it more a buy and dips behavioral pattern that you're witnessing, or are you getting that fear that a few more days like what we've seen last 2 weeks and you could see some redemptions as well kick in?
So I think the behavior from domestic investors was because of the budget event. So pre the budget, there were some concerns about long-term capital gains tax, and one saw some redemptions, especially from institutions or large HNIs. But the domestic retail flow continued to remain fairly strong. And post the LTCG, which was announced, there was some apprehension that you could see slowdown in incremental flows because of that. But that has not really happened. So we've seen even after that, and especially even after the recent volatility in the markets and a mild correction what we have seen, the inflows continue to remain fairly good. So I don't think people are too worried about that. I think people are still looking at it as a buying opportunity in this fall, because many investors who didn't really want to didn't participate earlier because the markets was just going one way are seeing some opportunity in this correction. But I think one has to wait and see how this pans out, because if the markets remain weak or if they correct further from these levels, which is not impossibility, I think in that scenario one has to wait and see. But I think large part of the inflows are pretty sticky, are coming in from regular SIP money, which I don't think should get impacted. That would at least be around 40-50% of the current inflows what we are seeing. Yeah, but some moderation in flows could happen, especially after the long-term capital gains tax, as people try to recalibrate that into the expected returns. And a lot of money which was moving into the debt side, and from debt coming into equity, especially into the hybrid category, I think there you could see some kind of a slowdown.